Hello and welcome to Taking Stock, our weekly wrap of the market action this week. I'm Vaishali Jain. Stocks saw volatility throughout the day on Monday, June 29th, but the Sensex ended the day relatively flat. Tata Motors posted its first annual loss in 7 years after luxury car sales took a dive. The Sensex fell on Tuesday on concern that liquidity will be squeezed out of the market if the budget doesn't deliver on expectations. Jaiprakash Associates and DLF took a hit, while Bajaj Hindustan fell after the government asked sugar producers to sell 1.66 million tons of sugar next month. The index rose again on Wednesday on the back of automakers after data showed healthy sales growth. June sales for Hero Honda rose 24% and Maruti Suzuki rose 23%. Hindalco fell after reporting an 80% fall in full-year profits because of declining demand, higher raw material costs, and derivative losses. On Thursday, the market ended up slightly again. Oil companies gained as fuel prices rose, and infrastructure stocks lost on news that the government would find it hard to fund infrastructure. The market had a strong ending on Friday, and both the sensitive index and the Nifty gained 1% this week. Top gainers were HDFC Bank, Tata Steel, Mahindra & Mahindra, Reliance Infrastructure, and ICICI Bank. Top losers included Kane India, Hindalco, Hero Honda, Sterlite Industries, and National Aluminum Company. All sector indices made good gains and ended in the green. To learn more on what to expect from the markets, we have with us Mint's market columnist, Manas Chakravarty. So, Manas, how are you expecting the markets to react to the budget?
Historically, markets have always fallen after a budget. Okay, they might rally on budget day or a day or two later, but if you take the period about a month after the budget, they've fallen. I think out of 15, they've fallen in 11 instances in the last few budgets. So there's a hell of a lot of expectations about this budget, huge amount of expectations built up. The point is, how will he increase spending? See, the markets are expecting that they will increase spending on infrastructure and maybe some softs to consumers and maybe even a few taxes being lowered like the STT and all that. But how will he square this with the other concern, which is that the fiscal deficit is getting out of hand? So that needs to be seen. How will he square this circle?
So what about this time around? Are you expecting a rally?
Unless the budget is very good and the government really says that it's committed to going through with reform. If that happens, then I think the markets will rally. But you must bear in mind that valuations are already very high, and also the dollar has been actually strengthening in the last few days, which is bad for emerging markets.
But have fundamentals changed so much to justify the rally we've seen?
They haven't, but in fact the Indian markets are already quoting at a substantial premium to other emerging markets. The idea is that maybe earnings will go up sufficiently to justify that premium, but that will only happen in the long term. I don't think it will happen in the short term. In the short term, everything has been priced into the market.
Okay, thanks Manas for joining us. And that's all we have for you today. Thanks for watching LiveMint.com.